Good morning, it's Monday the 10th of April. This is the Phoenix Blue update brought to you this morning by Tom Colley. I hope you all had a great weekend. Certainly if you're here in the UK, we had a lovely sunny weekend, bearing in mind it's only the first week of April. But back to the markets, and last week we really had everything boiling down to the non-farm payroll numbers that came out on Friday afternoon. Let's go over and have a look at the news for Friday first. Before we get to the non-farm, I'll just cover some other things. We had manufacturing production on the pound, which came in below forecast, and then at the 1:30 release we had unemployment change, which were positive numbers and on forecast numbers for the Canadian economy. Then we got to the big one, the non-farm payroll, and here we had what is a really big miss. We were forecasting 174,000 job additions in March. We actually only measured 98,000. In addition, the previous month, the February numbers were reduced by about 21,000. I believe that had been a really amazingly strong number, but that's subsequently been reduced. So always keep an eye on that, because that in conjunction with the current number can either exaggerate the standalone number or mitigate it if it moves the other way. So what we would have clearly expected here on the back of that was dollar weakness, but we also have to take into account two other figures that come out here alongside non-farm payroll, and they are average hourly earnings, which held up at the forecast rate of 0.2. But more importantly on this occasion, the unemployment rate fell from the previous 4.7 and the forecast of 4.7 to 4.5%. Now that was potentially significant because that's the first time that employment's fallen below, to levels pre the 2000-2008 crisis. So there was significance in that. There is also another big factor in the way that the market reacted to this non-farm data. Was overnight, the night before, the Americans had sent cruise missiles against Syria in retaliation, if that's the right word, for the chemical attack. So there was a geopolitical side to this as well, and we believe that the dollar retained strength against these numbers for a combined factor of that unemployment rate and also on risk aversion in terms of what's happening politically on a worldwide scale at the moment. There's clearly issues over Syria. There's issues because of that between the US and Russia. So lots of things feeding into that, to why we potentially got those, or we got the reaction that we did, which was a strengthening of the dollar into, as I've said, the core number, which we would have expected a weakening of the dollar. We did see an immediate weakening, a reaction, but then that reversed completely in the other direction. Now, looking forward to today's news, we've got Fed Chair Yellen speaking this evening. That will undoubtedly be interesting. I read somewhere that she spoke immediately after the non-farm numbers came out, or commented somewhere. I haven't been able to find the actual comment, but I read, and I say that cautiously, that she said something which somewhat dismissed those numbers as not being overly significant and played on those unemployment rate numbers there. But again, as I said, I looked again this morning to try and find that, so that's only hearsay. Okay then, so we go into the week. We've had some poor non-farm numbers. We haven't had the dollar reacting as we'd expect. There's a lot of issues politically over and above those isolated in the US. And in addition to that, this is a bank holiday week, so it will be a short trading week. Friday is Good Friday. The markets will be closed, and there won't be a morning update and things like that, for instance. Anyway, over to the charts themselves. Here's the dollar index. Very clearly, we're in a triangle formation here at the moment. The point of control, which is the level that passes right through the apex. I'm not sure if that's the correct technical term. I can't remember schoolboy maths, but through the apex of those two trend lines there on the triangle, that's clearly around a very key level of $100. So our dollar strength bias is clearly going to remain on the table as long as we stay above that. The next key level is around 101, where we'll be looking at potentially looking for a break above the triangle, a pullback to retest and take it further to the long side to confirm dollar strength. One other interesting thing that I spotted here on the weekend in drawing this triangle, basically what the triangle means is it's effectively price consolidating, in that it's not making higher highs and higher lows, or lower lows and lower highs, but is actually converging on those points. Now I just took a look at the dates, and I'm sure it's not a coincidence that this point here is the end of the first 100 days of Trump as president. That's the start, that's his inauguration on the 20th of January, and on the 10th or around the 10th of May, that's his 100 days. And traditionally, presidents are measured quite significantly on their first 100 days in office. So in that respect, we can almost see this triangle as being a summary of how the market is judging his performance in very simple terms. Nothing that we're actually going to do anything to trade outside what we'd already trade. I just think it was interesting, and I thought I'd just point it out that things are very often linked to the outside world, and that's just a classic example of that. Okay guys, over to US dollar JPY now. Well, we've clearly got support at a level through here at around 110.40, 110.15, something in that level there. The obvious trade here for this week is dollar strength plays out. We get a break above this level, a pullback and a retest of this level where we'd look to take a trade to the long side. You'll see I've also got an entry down at the bottom of this, you call it a box range or consolidation. If price comes back down there, there's a very high probability that it will reject that level again. And there's good money to be made in that particular trade if that happens, even if it doesn't break the top of the box range at this level that I've already said. We're really looking for the break above retest and take to the long side there. So that's the yen chart. Now, also interesting alongside that is the Nikkei, the Japanese stock exchange. It's been in this box, really going back to December 2016, and it's simply been ranging through this consolidation area. But we've had two very clear in fact, last week, if you count that one, the level here at about 18,735 was clearly rejected there. It's been rejected again here. It's been rejected again on Friday, and we've now got to move above. Now we look to correlate this market directly with the US dollar JPY chart. If the US dollar JPY chart is bullish, we'd expect this to follow that and be bullish as well, and it's giving us that indication. So we've got another confirmation that the market is finding a significant bottom here and trying to move to the long side. There's obviously a trade opportunity there on an end of day entry with a buy stop above that bar and your stops below, targeting the top of the box range. I'm sure there'll be intraday opportunities within there as well. Over on the euro, well, we've got the reverse of the triangle we've just discussed on the dollar index. It pans out exactly the same. This point of the triangle pans out to be the end of the first 100 days of the Trump presidency. But that's what we'd expect, bearing in mind how tightly this is inversely correlated to the dollar index. What are we looking for this week? Well, we're looking again for dollar strength to play out. We'll be looking for a close below this 105.89 level through here, pullback, retest, trading to the short side, or there's a significant zone through there, another box range consolidation where it continually rejected that level through there. You'll see I've got an order in there. I think that's a significant level. If price does pull back, our bias is still to the long side. I still think that that will be an entry and a trading opportunity to the short side, and then coming through this level and taking this trade here. If that hasn't happened effectively, the breakthrough, pullback, retest, and back to the short side, seeing targets, well, to be fair, conservative targets this week, because it is a short week. There could be a lack of liquidity ahead of the bank holiday. So in markets such as this, we're not looking for outrageous targets. Over on the Aussie, guess what? Another box range. This time I've marked it in yellow, clearly at this level, around the 7,500 level through here. It's a very significant level. Price is below that level today. That doesn't mean it will close below that level. With a box range, if we get a reversal signal from the bottom of this box range, we'll look to trade that to the top of the box. If, however, we get a close below here today, we'll look for a further close below and a lower low before looking to take a retest and a BPR trade of that very significant 7,500 level. So if the dollar strength plays out, we will expect to see that to the downside, but we have another fallback, which is that a trade to the long side, and because it's in this box range, that would then be a very high probability trade to take that back to the top side of the box in the first instance. Gold did exactly the opposite of the dollar yesterday, on Friday. As we've already talked about the non-farm numbers, it should have done exactly the opposite. We should have seen dollar weakness. We should have seen the stock exchanges strengthening as we go to a weakening as we go to a risk-off scenario, and we should have seen dollar strength. We've seen exactly the opposite, and we've got a lovely high test bar here through this level, rejecting 1260 again. We were looking at and taking intraday entries through at 1260 earlier in the earlier part of last week, which we had some success with, but the market didn't move away cleanly. We had the non-farm spike, which obviously we weren't trading. So we will be looking for further intraday opportunities down from 1260, but alternative, we'll be looking for gold to fall below the twist 1241.50 level to pull back and take that back to the short side. That is the less aggressive entry. There is another small box range in there, and clearly if you were taking that candle as an end of day entry, you wouldn't even get to one-to-one profitability without breaking that level. So we will be looking for intraday entries around 1260 to take to the short side, or a BPR end of day trade to take to the short side from that 1241.50 level. Okay guys, that's it for today. A reminder that Tuesday next week in London in the afternoon, we've our next free trading event. If you want to come along, go along to www.eventbrite.co.uk and register for the event. That's all you need to do. If you've got any questions about the event or are having problems with Eventbrite or anything, simply go to our website and contact us through the contact page there. Okay guys, have a great day's trading. Be aware of the fact it is a shorter week there this week, and we have the possibility of a lack of liquidity. We haven't got much news today, so I think it's fair to assume, unless we see something else, that we'll have a quiet start to the week today. Okay, speak to you in the morning. Thank you and goodbye.